Time now for an in-depth look at the market news this afternoon, and for that I'm joined by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you very much for having me today.
Well, the Federal Reserve's latest Beige Book is out, and it says the U.S. economy is growing modestly. What else is in the Beige Book, and what do you make of it?
Yes, if you look at the Beige Book comments, the unemployment basically are quite low. The employment continues to rise slightly over even as the labor market remains tight across the United States. Fed says the vast majority of its 12 districts continue to note difficulty in hiring workers. Some contacts noted their inability to fill jobs was constraining the business growth. The wage pressures are rising slightly in a modest pace during the reporting period. The retailers and manufacturers in some districts mentioned higher cost, which some attributed to the tariffs issues. Most of the districts reported a stable, moderate growth, growing consumer spending, and increases in the auto sales and tourism were seen across the several districts. Overall, basically, the U.S. economy seems to be fairly stable, and the growth rate remains to be well above 2%. We think that this trend can continue in the future, and because of this, the overall market seems to be moving nicely in the right track.
Well, so with U.S. growth picking back up in the third and fourth quarters and some optimism on a trade deal with China, stocks on Wall Street have set new records for a fourth day in a row now. What's the story there?
Yes, as you said, the record high indices are continuing to happen in here. If you look at the U.S. growth rate, it is at 2.1% for GDP growth rate. And in terms of the consumer spending-wise, it is rising by 0.3% month on month. It is higher than expected. And the overall, the wage increases are rising at around 4.89% YOY. All this is indicating that the overall economy is very, very stable. Having said that, if you look at the equity market, Dow, the S&P, and the NASDAQ continues to show rising trend. Yes, there's some indication that overheating is happening, but nevertheless, valuation seems to remain quite attractive. We think that the additional rise can happen till the year end, so we might see the Santa rally or the year end rally.
Well, tomorrow we have the Bank of Korea releasing or having its last meeting of the year to set interest rates, and the outlook seems to be almost certain that rates will stay where they are. What's the feeling among investors, and how are Korean stocks doing?
Well, Korean stocks are not doing too well. You can see that foreign investors continue to net seller of Korean equity market, and the growth rate of Korea seems to be much below the intrinsic growth rate. So if you're looking at the growth rate next year, in order to meet well above 2%, we think that they need to cut additional rate. So they're not going to cut it tomorrow probably, but over the next course of 6 to 12 months, we think that the BOK will cut probably another 25 basis points in order to boost the economy. Not just the monetary policies, but the fiscal policy needs to be effective as well. We need to see the supplementary budget or next year's budget needs to grow in a quite sizable amount to see the overall economy to grow. So without those, we think that Kospi will continue to be underperformer to relative to global equity market. As of today, Kospi was also down. Kosdaq was down quite sizably. And this was affected by the renminbi depreciation as well as Korean won depreciations due to the signing of the bill by U.S.
Got it. All right, Mr. Yu, that's where we'll have to leave it for today. Great to get your insights as always.
Thank you very much.